Hello, everyone, and welcome. My name is Peter Storey. I'm the head of prices for food and agricultural commodities. I'm joined by Guilherme Esteves, who is a prices analyst with us in the Brazil office. How are you doing today, Guilherme?
I'm doing very good, Peter. Thank you very much. It's a pleasure to be here.
Pleasure's all mine. So, Guilherme, today we were hoping to talk about grains and oilseeds in the South American markets. So, just to start off with, the big behemoth, Brazil. What exactly is the situation there at the moment? Because I believe they're probably in full planting mode at the moment. So, what's going on? What's the prospects?
So for Brazil, we have a forward guidance pointing to another very large soybean crop on 2020 for 2025, and a solid corn outlook for the next year. USDA Crop Explorer pegs Brazil soybeans around 175 million metric tons, on modest area grains and trend yields consistent
Mhm.
with Brazil's latest planning figures. Brazil's supply agency, which is CONAB, projects 354 million metric tons on total grains in 2025-26, about roughly 1% year over year, with soy output roughly up to 180 million metric tons if weather cooperates. On corn, USDA FAS notes high production potential, but flags domestic demand from livestock and corn ethanol could cap export growth.
So, generally, a favorable situation for Brazil, would you say?
Yeah. I would say that, yes. If weather cooperates, it's a favorable situation.
And then just moving to Brazil's southern neighbor, Argentina, is it a similar positive situation there, or is it a bit more, well,
Yeah,
complicated?
quite similar. Yeah, quite similar, Peter. For Argentine, we notice soy moisture recovery in the past weeks, and this passes reset expectations a bit higher. The Rosario Grains Exchange says recent grains could push 2025-26 grain production towards historic heights, and it seems and now it sees record exports of grains and byproducts, roughly 105 million metric tons next season, topping prior exports. USDA baseline keeps Argentine soy for roughly 49 million metric tons on slightly lower area, but better yields after the 2023 drought cycle. So late September, early October policy moves, like the temporary suspension of export taxes, aim to accelerate the farmer selling and cash flow into planning. Bottom line from both countries is weather has put both countries in a strong footing for soy and corn next year, and Brazil leads, of course, in scale, while Argentina leads in recovery and tax relief, which could potentially add an export momentum on the early season next year.
So really in a landscape, certainly for grains and to a lesser extent oilseeds, where prices are fairly low, it's definitely well, it's not news that will push prices higher anyway, going into
Yeah.
2026. Okay. Um, all right, perfect. Well, I wanted to move away from just production statistics and the outlook for 2026 output, and move on to more like trade relations. Obviously, U.S. China has been a big uh, flashpoint, shall we say, in 2025 so far. It did quieten down over the summer, but certainly in the past week or two, it's ramped up again with more threats of U.S. import tariffs on Chinese products. So, is South America already really capitalizing on this situation, and could it still yet?
Yes, and it's very visible on China's buying ledger. So through mid 2025, China leaned even harder on South America. We saw record July soybean arrivals, largely driven from Brazil, and traders reported in the US no bookings on key regions on September and November window.
Mm.
So it's a very like worrying situation for the US. On by January to July 2025, China imported roughly 40 million metric tons from Brazil versus 15 from the US. In late September, we saw Buenos Aires suspending export taxes, and Chinese crushers snapped 10 to 20, around like roughly 10 to 20 Argentinian cargoes for Q4 and Q1, displacing typical early season U.S. scales. So bottom line is tariffs and policy frictions have raised U.S. orange risk, while large Brazilian and Argentinian supplies, and now Argentina temporary tax holiday have kept South America being cost effective into China's crush program. So bottom line, yes, a lot.
And I guess in the short term, without any sort of conclusive end to the U.S. China trade war, then this situation could potentially continue well into 2026, I guess, right?
Yeah. It will endure if the U.S. is not very eager to negotiate with China.
Okay, well, sticking with with trade deals or lack thereof, there's recently, I say recently, earlier this year, been the announcement of the EU-Mercosur free trade agreement. Still yet to really make any impact, but is it likely to really change grain and oilseed trade flows from South America towards Europe, or is it not really that much? Well, not very significant for this part of the agricultural landscape?
Well, on this case, the response is a bit mixed, I'd say, a bit lukewarm. The European Commission sent the deal to the EU governments and the Parliament on September 3rd this year. That's a very firm step towards signature. Spain says ratification could arrive by the end of 2025, though resistance remains, notably from French farmers. The changes in agribusiness in general are that the tariff cuts and quotas will center on sensitive farm goods like beef, poultry, sugar, ethanol. For bulk soybeans, the EU applied tariff is already effectively zero, so immediate volume upside is limited or even nil. Gains will be likely in processed products like soybean oil or soybean meal, where duties and tariff rate quotas matter. And in corn, negotiated quotas earlier, EU outlines reference up to 1 million metric tons of corn could marginally lift South American excess in tight EU years. Meanwhile, the EU anti-deforestation rule recently delayed another year, which remains a structural gatekeeper for soil-linked flows. A delay eases near-term compliance pressure, but does not remove it. All in all, we expect an incremental oilseed grain upside contingent on ratification details and sustainability compliance rather than a surge itself.
Okay, well, thanks very much for those insights, Guilherme. So really just to close off, looking towards 2026, how would you paint the South American picture for grains and oilseeds?
So if weather holds, Brazil and Argentina will enter 2025-26 with a capacity to anchor global soy and corn availability. The U.S. China standoff continues to reroute China's seasonal buying towards South America, now amplified by Argentina's tax holiday, while the EU-Mercosur free trade agreement breakthrough would likely add a targeted opportunity like soy products, tariff rate quota for corn, etc., rather than transform the trade in raw soybeans. It's good to keep an eye on planting rains. Policy times land in Brussels and in Beijing, and Argentina tax policy beyond October for signals that could shift potential outflows.
Perfect. Well, thanks very much for wrapping us up there very neatly, Guilherme. And thank you, everyone at home, on the commute, or in the office for watching.
Thank you very much.